Hi, I've received a couple of requests about exercise 15-4, so I thought it would be best to walk through this because it is kind of complicated. I apologize for my voice. I have a bit of a bug, so bear with me. The easiest way to set this thing up, because these are securities available for sale, is I did it step 1 through 6. So the first thing you have to do with this is set up the allowance account, because you have them at cost here. You've got a fair value here. You've got a difference of $4,000, so you have to set this account up. And these are contra accounts, so you've got an allowance for an unrealized gain or loss, or a what do we want to call it? It's an allowance for the security adjustment. And then you've got the other account that is an increase or decrease, unrealized gain or loss. The allowance for the change increases the security amount, and the unrealized increase and decrease or loss and gain increases an equity account. So let's get that set up first, because everything balances off of that. So that would be an entry to the allowance for change. So I set it up in a T account. So we have a beginning balance of $4,000, and we have a beginning balance down here of $4,000. So that's step 1. Once you have that set up, and you have your table here set up, which you have to do before you can set up the balance, you're good to start in on entries for the year. So the first entry is May 3rd. Not only is the bug affecting my voice, but my brain. So you're going to debit the security and credit the cash. Then you're going to start a new list here, and I've added that to our list right here. Right there. I don't know what its fair value is going to be at the end of the year, but that's an advanced entry here. So I've set this up. Now we come around to July 16th, and we're going to sell security A right here. Well, security A we get $25,000 for. We paid $20,000 for it, and now I'm balanced. I can't have an entry that's not balanced. So this is a gain. As you can see, it shows right here the fair value. So now you have a gain on the sale of the security. Now we're not finished, because you have to remember I've got this allowance account for change up here, and I've got this decrease here. So what was the amount that was associated with security A that went into this original account? That would be that $5,000, right? Right here, because this is the net of the -1,000 here and 4,000 here, or 5,000 here. So I've got to remove that. So that sets up a debit to the increase and decrease, which brings it down here. And I want to remove that from the allowance account, which is 5,000. Now keep this in mind, so we need these T accounts. So I'm going to credit the allowance account for $5,000, which gives me a deficit, in theory, of $1,000. So now we go along, and we're at the end of the year, and I receive a dividend. So I get cash of $800 and a dividend revenue of $800. Now I've got to readjust all of this, because we started out with a $4,000 balance here. We're at a $1,000 credit here at this point. What's left now? What have I got? I've sold A, it's gone. So what's my new schedule look like? Well, I've got security B and C. They're booked at $30,000 and $13,500. Their fair market value, or their fair value, is $32,000 and $15,500. Difference is $4,000. So it means my balance in this allowance for change needs to be at $4,000. What is the entry I have to make that happen? Well, I need to do a $5,000 debit to the allowance and a $5,000 debit to the increase. That will bring this balance to $4,000, which matches this balance and reestablishes that account. So right now, those are 6 steps, and about every one of them will do that. The other thing is you may have other small adjustments to make throughout, but this is a basic walkthrough of 15-5. I hope I haven't muddied the water, and I hope I've cleared it a little bit. So thank you.